Ladies and gentlemen, welcome to the Autoneo video blog series Learn and Earn with Ivan. My name is Ivan Czar and I will be your host for this episode. Today we will talk about the Autoneo Swarm. What is the Swarm? Who are the participants of the Swarm? And why is the Swarm beneficial to all of them? As you should expect, all the details will be available in the description of this video. And of course, feel free to ask questions or make comments. So, if you are ready, let's get started. Before we begin, let me talk a few words about liquidity. As a point of reference, the Investopedia website is a very good one-stop shop. Long story short, liquidity means how quickly we can convert an asset to cash or other products or services. Some people have the misconception that currency, as in market cap in case of a financial asset, is the same what is a fuel is for a car, as it drives the price. No. That's the value that drives, or at least should drive, an asset's appreciation. I mean in a healthy and mature market, of course. Currency is more like what the oil is between the gears of that aforementioned car. It makes things move more seamlessly. If you want to buy, there will always be a seller for you can buy from, and vice versa. And they also compete with each other, so you can find a beneficial price. This is the so-called price discovery, when an asset has enough buyers and sellers, so the real price of that asset is discovered by the market. That's why liquidity is a key for growth, and that's why it entails great risk if people with malicious intent try to manipulate the market. It's safe to say that if there's only a single source of liquidity, the holder of that source can have a significant influence on the availability and the price of an asset. Therefore, they can distort the price discovery. Because you cannot buy or sell an asset on a price that the asset should have, you can make trades only at prices which are available. Low liquidity itself can be a problem, as if I want to buy or sell but I cannot find other parties to trade with. This can create the so-called price gap, when the least demanding sellers and buyers' price have a significant difference compared to each other, and it creates a discontinuity in the price levels. You hear the phrases liquidity provider and market maker a lot, and some may think they are the same. There are some differences, and their participation includes different risks for them. A liquidity provider is a user who delegates funds to a liquidity pool with crypto assets they own to facilitate trading on a platform or an exchange, and they earn passive income on their deposit. While trading illiquid trading pairs on order book-based exchanges could lead to suffering from great slippage and the inability to execute trades, the advantage thanks to the liquidity providers is that trades can always be executed as long as the liquidity pools are big enough. For this reason, liquidity providers are seen as trade facilitators and paid with the transaction fees paid for the trades that carried out thanks to them. In return for the passive income, they accept the risk of impermanent loss, which means when the price of the delegated assets changes in relation to each other, maybe they would have more money with just holding one of those assets. A market maker participates actively in the market by providing trading services for investors, and this way boosting liquidity in the market. They specifically provide bids, these are the buy orders, and offers, these are the sell orders, for a particular asset in addition to what is on the market already. In layman terms, they are actively trading for the sake of continuous market activity. In traditional finance, market makers typically work for large brokerage houses that profit off the difference between the bid and ask spread. Spread is just simply the difference between the price at which you buy and sell your asset. In crypto markets, anyone can be a market maker, but with Autoneo, you can do that in an automated and in the future in an AI-enhanced way. So what is the risk here? The market does not always move in your favor. Sometimes you buy an asset and of course you want to sell it at a higher price. But what if no one wants to pay that price? Then you will face a dilemma. Should you keep your asset and hope you can sell it later at your preferred price? Or should you just quickly sell it with some loss to prevent losing even more? Unfortunately, we don't see the future, but who knows, one day maybe Autoneo will. But until then, this is a risk that a market maker has to undertake. So what is the Swarm? Swarm is the unique solution of the Autoneo Foundation, a decentralized liquidity mining protocol aiming to evaporate the risk of market manipulation by providing initiatives for organizing crowdsourced liquidity. Ugh, this is heavy. I know, but please bear with me. Crowdsourcing helps to build a community which is diverse, therefore with more participants in the Swarm, the behavior and the interests are more uncorrelated, which will result that the liquidity will be fundamentally more robust. There won't be a single entity who can drag the market at will. However, this presumes that you are resistant to the so-called influencers. As in, you will make your own decision based on your own interest and not based on what others want or tell you to do. Token issuers, exchanges, spend a lot of compensation to incentivize people to provide liquidity in order to bring stability and trust into the financial system. These compensation may include cashback, free rebates on volume, discount prices on assets, and so on. Swarm has a marketplace-driven approach, which means with the right incentives, the liquidity provision can be maintained at a consistent level, enabling a fairer economy. And basically, this is one of the main missions of the decentralization: to level the playing field and to provide equal opportunity to prosper for everyone. Why do projects need a Swarm? When a project starts, most likely they issue a token. First, they may have a fair launch, angel round, or a private sale, and the next stage is usually the public sale. After which, when a project reaches a certain stage, this token is listed on an exchange. But here the problems start. What if there's not enough liquidity on the market, as in there's not enough money in the project? Or what if the future investors cannot find this project so easily? The Swarm campaigns can put these projects into the spotlight, and while participants make money, the fame of the project spreads. Or what if the investors would like to invest, but when they try to buy, the slippage is too high? Slippage is when you would like to buy an asset, but because there's not enough sellers on the market, the price can jump 5, 10 or even more percent due to your buying intent. It's kinda unacceptable, isn't it? Here come the liquidity providers in the picture. They say, okay, I let an exchange use my money on both the selling and the buying side. So I let the traders trade with my money. Why would I do that, or why would any liquidity provider do that? Because every trade includes trading fees, and there's a spread between the buying price and the selling price. So there are more ways to get extra profit. Why do exchanges need a Swarm? From time to time, exchanges and projects need extra liquidity or increased market activity. This can have several reasons, like generating volume in order to stabilize the trend or a price level, or maybe the exchange wants to jumpstart the projects which are newly listed on the exchange. But the strongest reason they need the Swarm is that it does not depend on a few number of entities, therefore there's much less risk involved. How Autoneo solved this problematic situation? When you use the market maker, you put buy and sell orders in an automated way, therefore you provide liquidity. Yes, you can call yourself a micro liquidity provider. But if we summarize all the market activity of the Autoneo users, then we can produce a very significant number, hence the name Swarm. Autoneo does not function as one big entity. It functions like a conduit between a lot of tiny users like you and me, and between the markets and the projects. It's like a swarm of market participants, or let's say we can swarm the market. So why do you need the Swarm? What about the extra money on the top of your trading profit? Sounds good to me. In the next episode, I will show you how you can participate in the Swarm in practice. So we will not just talk about it. Until then, please check the links in the description of this video and feel free to subscribe our channels and to share our content. Of course, we are very open to your questions, suggestions and comments. If you would like us to talk more about something you are interested in, just leave it in the comment section and we will elaborate on that later. I do hope you liked this video and you found it informative. So until next time, thank you, bye bye.